Now let's watch a video I'm looking forward to. It was really good. Fake markets, real consequences. It's a great video, but let's skip ahead to the interesting sections. Like and subscribe.
And have figured out that you can basically treat the oil market like a yield curve in the bond market. The Austrian libertarians and so on will say suppressing yield curves in bond market through Federal Reserve open market operations is like...
I watched them manipulate the food markets, grain markets, back in 2009, 2010. This has been going on a long time.
Destroy the economy, whatever. That's a debate. I think there's two sides to that debate. But when it comes to oil, no, there's no debate. I'm sorry. This is a real market. This isn't a financial price on money. This is a real market. And treating it like a bond yield curve or something it's bonkers. And no one could ever justify that. If you found the people that are doing this, which I think we know who they are, I think we know what organization they're affiliated with. If you sat them down and said, justify this, rationally, you're smart people, most of you have economics degrees, justify what you're doing. None of them could, because it's bonkers.
Well, it bonkers. I want to just talk mechanism for a minute, because, people are like, oh, well, they'll have to experience punishing losses. Maybe, but if I was doing this, and I'm no deep Wall Street insider, but I would just set up wash trades. I'd have a main company and a subsidiary, and this would be selling, and this would be buying, and so the losses would be circular, right, contained within that one organization.
Your comments on that, and you nailed it. You deserve credit for that. I've been telling everyone since to have a look at your stuff on the wash trade thing. That's what it is.
And if the regulars are doing the wash trading, who's going to hold them to account?
100% what it is, because the Treasury can't book this stuff, right?
Yeah,
Basil will be arrested or something after new restrictions go. That can't be legal. Yeah, you set up wash trades, and of course, what prevents wash trades from happening? Regulators, right? But if the regulators in on the wash trades,
Yeah. I mean, it's an emergency.
Now, by the way, they're still taking a huge political risk here. Because let's say people like us are right, and the energy crisis hits like a sledgehammer and creates a new kind of massive inflationary 2008-style recession, or worse, depression or something like that. People are going to want scalps, remember 2008, right? And if they figure out all the manipulation, oil price manipulation meme is out there, they might start doing congressional investigations and so on. And you know what?
No, they didn't back in 2010 when in the grain markets. It has been going on for decades. They're not going to investigate it.
Trades are illegal, so
we'll see. I mean, I know a bunch of people in the biz, and I was glad the Financial Times at least put it out there. This is from March, right? And they said, these traders were saying, hey, we were being pushed by clients as to who the big seller was. Speculation was it could be from the U.S. Treasury. Listen, if you're in the oil business, these traders, they know where all the trades are coming from. They know the tape like nobody's business. You can see the pattern of it. It's really sophisticated, and these guys and gals, super depth. All of a sudden, this mystery buyer.
They all talk to each other. They talk. They call up and they go, "Who was the whale? Who was the whale?" Everyone knows within 5 minutes, 100%.
Yeah. So there was this mystery whale that showed up sometime in March, and
I call it the Whale of Hormuz for what it's worth.
The Whale of Hormuz.
I love it. Okay, so and just to put some context on this, let me see, where would I go with this? So let's talk about the inventories real quick. So as you said, look, we'll know everything's open.
This is not good. It's not where it's supposed to be. And that's even with the Strategic Reserve releasing supplies.
Okay, if inventories are kind of staying sedate, right? Because that means we have supply. We know we have a big supply pinch. I think it's up to about 15 million barrels a day of oil plus 3 or 4 of products currently. That's a shock unlike anything we've ever seen in history. But we've got this price, which is sort of sedate on the side. And we detect that because we see here, in the U.S., commercial crude inventories are just sliding, right? And this is all products, total inventories, including SPR. It's 1,500. So this would include NGLs, which we're just swimming in the United States. But this red line just shows that any time in the last 20 years, we have super low inventories. And then when we go to Cushing, we see here the Cushing's at 18.5 million barrels. And some people say, well, is that close to the suction line? We were last year in 2014. And then just yesterday, or maybe this morning, Tracy Shugart said, really great context on this, that prior lows was 11.8 million barrels in June of 2024 and 14.45 in September 2008. However, total capacity in 2004 was 27 million barrels, and in 2008 it was 41 million barrels. Today it's 91 million barrels. So this is hot. 44% of total capacity and 51% of working. That's how low it got down to there in 2004 at 11.8. 2008 it was 35% of capacity and 41% of working capacity. Comfortable. Today we're at 20% of total capacity, 24% of working.
So 20% of capacity. You have to understand one thing about the oil system in the United States is there needs to be oil in the refinery pipes or they stop working, a certain amount of oil in the whole system. And so you can't go much lower than 20% before you have refineries that stop working. Actually, I don't know what the exact number is, but we're getting towards it.
This is going to become a crisis at some point.
Soon, it feels to me soon, right? I
Yep.
mean, I think so. Here's my theory on the whole timing and everything, because I think I've kind of figured it out. So basically, what happened, I think, this is reading the tea leaves, but sometimes you can, and it's not just like conspiracy theorying. Like you can actually figure out these things. And as you said, this is what oil market guys do. Like oil market people at that level are the biggest conspiracy theorists you'll ever meet in your life, right? Because they know there's like a million conspiracies in the
Because they know they live them.
Yes. I was at that level, and that's why this is my world.
They live them, right? Like you're a crappy trader if you're not a conspiracy theorist. So so basically, I think this is basically what happened, right? The war kicks off. We're not going to talk about the origins of the war. Shrouded in mystery, completely bizarre. We'll know one day, whatever. War kicks off. It's not thought through. You can see that. It's not backed by the deep state in the United States. The Pentagon scrambling to put together war plans. The big tell for me was there was no concerted propaganda effort like we saw after the beginning of the Ukraine war. And so there was no like bot army there or anything. There was no capacity for this because the United States deep state never intended on attacking Iran because it's bonkers. So, I mean, the Ukraine thing's bonkers to me too, but I mean, at least you can put together this.
Yeah. This is one section of the deep state. Zionism, the Israel Netanyahu is part of the deep state. It's just one fraction of it. And this one fraction of it pushed for this Iran war that the rest of deep state wasn't on board with. That's my interpretation. Because Israel is part of the deep state. The Zionism, the whole Israeli lobby in politics in the United States is part of the deep state. But it's just part of it.
Plan in a sense, sort of. And so there's kind of I'd always say like the Ukraine war has redundancy built into it, like from an investment point of view, there's a margin of safety. Like you can step away as the United States or whatever. The Iran war, you're like all in because it's you going to war with these guys. So there was a big scramble on, and then we kind of saw the shock effects, which was rising price of oil and so on. And I think the manipulation, the softer manipulation, kicked in immediately because it was already there from the Red Sea period.
But he is right in that that the deep state wasn't on board with this because they capped oil prices. Just like the food crisis back in 2009, that was a whole bunch of natural disasters around the world that just happened to strike in one year, hurting crop production everywhere. It's not something that deep state could have ever predicted. That's why they needed, because of derivative, to put a price cap on everything. This Iran war that the deep state wasn't prepared for, that's why they had to do the same thing. Put a price cap of 100 because they have all their derivative exposure. They need to crash the price down here and... Oh, I'm hiding it again. They had to put a price cap on it. Then they had to crash price down here. And here, they got themselves out of the derivative pickle that they were in. They managed to close out all, let's say, the call options that they'd sold to put a cap on the price of oil, or the put options they sold on treasuries, stuff like that. They managed to sort themselves out a little bit. And so now, at least, it won't create a financial crisis if oil prices skyrocket. Is the way I see it.
Said, and we can talk about the algos manipulation and the short dumps and everything later. But assuming the mechanisms there, I think the bots were already in place to do that. The organization was in place to do that basically because of the Red Sea crisis, and then. They couldn't get it down. That was around the time when it was like pinging between 110, 120 almost. And, that was not the real price. The real price, I'd say, was like 150, 160, 170 back then.
Yes, agreed.
Today, it's probably north of 200 in my opinion. But so they were putting pressure on the price to bring it down to like a tolerable or reasonable 110, 120. But they weren't doing what's being done recently, which is, crazy stuff, $70 a barrel in the middle of a straight of...
That... He is an understanding. That is because of derivatives. That is because of the whole point of dropping it all the way down here is to close out all the derivative positions that, like, the deep state was trapped in. And then they can reposition themselves for higher oil. That's what this big spike down was. The same thing happened in wheat. In 2010. This is important to see. Natural disasters around the world. Everyone knows the price of wheat is heading up. So they crashed the price of wheat to reposition themselves in derivatives. Then they allowed the wheat price to go up. So that's the same dynamic going on in the oil market right now. They crashed the price of oil, by negotiating the MOU and as doing all the manipulation they can, got it down, and then saved the financial system, repositioned the big derivative bets so that the banks don't go under.
Hormuz closure, like lunatic stuff, they weren't going that far. So what I think happened then was basically that the Treasury responded formally and, had a working group or, however they do it. And they said, okay, we don't know what to make of this war. We can't plan for that. It's not our job. But we need to get through to the midterms. And that's basically our job. We can't have an inflation crisis before the midterms. And really what that'll come out as is a bond.
They can't stop it.
Crisis. We can go into that later because the suppression of the oil prices really is bond price control, right? And you can see the correlation between the two if you run it. So that's what the Treasury is actually targeting, in my opinion. And basically they said, okay, how do we get from here to there, right? And they put together a plan. And I think the plan was relatively coherent. It's short-termist, kicking the can down the road, and irresponsible, in my opinion, because they're just playing politics. But, at least it's coherent. And basically the plan involved getting the Chinese to buy a lot less oil. And so they go over to Beijing and they do
definitely, yes, they definitely did that. I absolutely agree.
Whatever the Chinese want. You remember the optics of that trip? It was, wow, they're really Trump almost put on a Mao suit. I was like, whoa, you guys are really going for it, right? So clearly they wanted something. And I think what they wanted was them to ease up on the oil demand, basically. And the Chinese, it looks like they agreed to it. But I think the agreement that the Chinese struck was, okay, you do this MOU. I bet that was discussed in Beijing, point by point. You do this MOU. It's 60 days. This gives you 60 days to resolve the crisis that you created, and we will give you respite for that 60 days. And then they can go back and they can say, do the numbers on that, and they can say, okay, between the SPR, private inventories, a 60-day ceasefire, which will hopefully we'll be able to get a little bit of oil through, and won't be quite as bad, and the Chinese halving their demand and tapping into their enormous reserves, we'll get past the midterms. And then what happens? Trump wakes up on the wrong side of the...
I agree with most of what you're saying, except the one difference I have is the goal was just to crash the price. That was all that was needed to be accomplished. Because that, or at least from the Secretary Bessent's perspective, was to get himself out of his derivative troubles. He needed to get oil down, then he can reposition himself, just like they did with wheat. There's a shortage of supply in the wheat market right here that everyone knew about. And if the price just went up, well, the people short wheat would have been in trouble. So they crash it, reposition themselves, and let it go up. Same deal. Crash it, reposition themselves, and now Bessent, as far as Bessent's concerned, it can go up. He is still maybe manipulating it on Trump's behalf, but the shortage will push it up anyway. You can't stop the shortage.
Then tears the whole thing up. And now if you run the numbers, I don't think there's... Yeah, as usual. And now if you run the numbers, I don't think there's any chance that they can get to the mid.
Always being winners and losers. Well, let me just show you. 2010 food crisis for dummies. December 17th, 2009. So right about here, somewhere here, I wrote about the 2010 food crisis when wheat was about $3.80. It went all the way up to $9 by early 2011. So there's no way to manipulate outright shortage. It will go up.
And I think they're flying blind. Applying all the tools of the manipulation as hard as they can. In the past 2 days, I think we've seen a particularly aggressive push, which seems to me to now include not having proper financial reporting on some of what's happening in Hormuz and so on. Not like a blackout or anything, but just not a sufficient amount of attention being paid to it. And but at the same time, in my opinion, since Tucker highlighted it, I think that people have become aware of what's going on. And I think that I won't name the journalists, but certain journalists at Bloomberg, for example, have discredited themselves. And...
They discredited themselves to me decades ago.
They can still, if we talk about mechanism, you'll see a lot of it's algorithmic manipulation. So in one sense, it doesn't matter if the humans don't believe the illusion. But, in another sense, it really does matter that the humans don't believe the illusion. So I think they've got themselves stuck. I think they're in a boat without a paddle, in a sense, and they're just putting the head down. But there's no chance now. I ran the numbers even without the Bab al-Mandeb thing. I ran the numbers just with including an extra 6 million barrels a day for the Chinese back to their 12 million normal, and you don't get to the midterms. SPR runs out before the midterms. And now I saw recently an energy official in the United States is trying to say that the operational minimum isn't 150, it's 70. Ooh. No. Oh,
No.
yeah.
Yeah.
No,
Like,
no, that's they blow out the ESR caverns and they're single use. So that's 130 million barrels that we never can use again for storage if they do that.
Well, that's the signaling.
They might try to do that, but I think they'll run into some other troubles. It starts scraping the bottom of the barrel. All types of things go wrong.
And you've seen how this administration's behaved on multiple issues. Could you not see them do something stupid like that?
What, sacrificing all kinds of strategic long-term benefits for a short-term gain? This administration?
Yeah, something like that, Chris. Something like that.
I want to go to this China thing real quick because that's where Trump takes over this delegation, May 13th, right? And they spend a couple of days there. And so that green arrow sort of marks on the chart. And I think there had to have been some agreement that gets us to this big slopey line. This is where China really started dialing back its imports.
That was a great
It really
chart.
began in April, but this is where China really...
Trump meets oil creators. Definitely some type of and it happens because China imports less.
started dialing back its imports. It really began in April, but you can see here, April, May, June. I mean, this is really where
And now they're heading back up.
right after the meeting, China really dials back its imports. Pretty big.
Yeah, I remember even the stuff before it. The diplomatic discussions by the diplomats will take place beforehand, and they'll prove, they'll do a test proof. So I wouldn't put, those agreements had taken place long before Xi and Trump had shaken hands.
That makes sense.
Yeah. It always. I worked in foreign affairs here in Budapest for 2.5 years. I saw all of that. So they'll say because they'll say prove you can do it or whatever. And I think, the Chinese asked for, one of the things they asked for was related to Taiwan. So they wanted to see that they could do it because I think it was an arms shipment or something like that. So yeah, I wouldn't, if it doesn't correlate in terms of dates, I wouldn't worry too much about that. The preliminary backroom diplomatic discussions would have taken place before the meeting.
Was it just Taiwan? Was that the pro quo in this quid pro quo? Because gold also started to tank right around that same time.
That's true.
What's your theory on that?
Oh, China just wants a lot of gold, and they're very clear about that. And I think they'd rather buy it at 4,000 than 5,000 is all.
Yeah.
Top
There could
export.
have been a laundry list.
Top export for the United States. It was gold for the first quarter, and we're waiting on the second quarter.
Gold prices haven't made sense for months.
I know.
If you look at fundamental demand, I mean, there
this in
was
the
a
same
big
bucket?
dump from. Sorry.
Do we put it in the same narrative control bucket? We're going to
So
control
I thought
prices of
originally-
things.
I don't want to go off piece, but I put it down originally to Turkey dumping the gold because they're trying to support the lira, and that did happen. And then I was kind of raising, at least on my Twitter account, and to some friends of mine who are working on funds and stuff. I said, be careful with the gold thing because if we have a big unwind of the US dollar system, countries might have to start hemorrhaging reserves just to prop up their currencies, and you could see some short-term downward fluctuation in gold. And I think that's reasonable. It's certainly logical, but yeah, I don't know if the Turkey dump continues to explain the gold price. I know
this
the
was
gold
the Turkey
gold
dump.
model- That
Here.
was the Turkey dump, yeah.
Yeah, but on the blue solid line is just on balance. Central banks have been net buyers for a couple of years now.
Yeah, so the Turkey dump, when you saw that, you're like, yeah, that makes sense. I don't know if the market's made sense since then. There's been pretty strong demand. You might be right. They might be trying to push it down and agreed to a price for subsidized gold for the Chinese. I mean, totally nuts. Anyway, there's no point in even saying it.
Who knows what Trump promised the Chinese?
To be honest.
It is what it is at this point. All right, but if we can just talk about how totally nuts it is. We're recording this on the 31st of July, and just last night, you have to get a big map to find out all the ways the United States struck Iran. So lots of things, a lot of HIMARS strikes, dozens of targets. Iran struck back. CENTCOM says you didn't hit anything. Satellite data will probably show us they did in a couple of days. And, fog of war and all of that. But what I've been absolutely shocked by is that the Alab Kike refinery up there in Saudi Arabia gets targeted, gets hit days ago. And we have no updates, right? This is a public company. They should at least say, hey, 2 weeks, 13% affected, nothing damaged. Nothing. And this, I only mentioned this one because it handles 7% of the world's throughput of oil, conditioned oil, and products. I mean, this is the biggest refinery in the world.
That is interesting.
No data.
Makes me wonder what else isn't being told. I've wondered for a long time whether part of the crack spread blowing out is just because refineries are paying more than the spot price of oil. Wouldn't that make sense? You calculate the crack spread by subtracting the price of gasoline and diesel from the spot price of oil. Well, one thing that would explain that is the spot price that we're getting is wrong.
Another thing that would explain it is a lot of refineries in Russia and in the Middle East are being taken offline because they've been attacked. And that means they can't refine oil into the end products. That puts downward pressure on oil because refineries aren't using it, but that puts upward pressure on the products like gasoline and diesel. However, refineries in Russia are coming back online, and that should work itself out eventually.
not saying I know that.
Yeah, that scenario is amazingly good for U.S. oil companies because oil refineries in the United States are running at like 97%, no downtime, to take advantage of this huge crack spread between what the price they can buy oil at and the price they can sell the products at. And yep, it's good for anyone invested in oil companies.
But like, it sounds a lot less crazy because you're like, oh, well, then somebody in the oil industry will come out and say that. Yeah, well, what you just said about the Saudi refinery, I mean, like, you know, government's going to apply an awful lot of pressure to private companies. That's all I'd say.
Yeah. So, and I go to base data as best I can. I don't know that I trust the tanker crossing data because
Look at all that missing oil.
they could turn off their things, or I don't know. I'm having trust issues these days, Philip, with all the data. But if we can believe the data, I mean, obviously, this is just a fraction of the flows that you would need to have to be back to normal. And even if everything sort of rainbows and unicorns broke out this afternoon, it'd probably be 6 months to a year before we got really untangled and back to full, I would imagine. How big of a hole is that in our overall oil story?
I mean, it's like, what, 20% of the supply, right? I mean, here or there, right? It's unimaginable. Like, I think we're walking off a cliff here. This is nuts. I don't even know what to say. Like, we're about to completely collapse the global economy. We're going to have, like, migrant flows up to Europe because once people run out of diesel down there in Africa, like, they're walking up to Europe because... And then we have a looming...
Yay. Look forward to that.
As well.
Oh, and the food crisis, that's next year. But it's going to be bad.
A bunch of fertilizer didn't get delivered. The planting season's been thin. If you look into what's being said in, you know, agricultural specialist journals and so on, I think next year will be worse than this year for what it's worth. But
that's one thing I've learned is how long it takes from when there's problems in the planting season till the price spike and shortage. There's about a year lag time in agricultural commodities.
This year, like, is going to be a thin year, probably similar to. I think there was a similar issue during the initial COVID lockdown. So it was a fertilizer shortage and we saw food prices go bonkers. But the thing is, the food prices are building on top of the already intolerably high food prices. Like, food prices are shocking at the moment. I don't think CPI inflation remotely captures modern living standards. I think it used to. And I think it basically stopped probably in the early 2000s, maybe a little bit before. And they were giving far too much of a weight to technology products, which are deflationary. They just always go down and they're quality adjusted. So flattening the television means you put a new weight on it. Like, I know how to do CPI weight calculations and all that, and I know what they did. It does, by the way, CPI does show inflation directionally, but I don't think it shows the true amount of price increases. And I think, not at all. And I think the main thing that hits most people, unless you're in the top maybe even 5% of the income bracket now, but I'll be generous and say 10%. The 90% of society, the thing that hurts the most are increased interest payments, especially in the United States, because of the debt-based economy that's there. But even in Europe, you know, mortgages can hurt too. And we have less fixed-rate mortgages in the United States, obviously, because...
There's so much pain in the pipeline, economically speaking, for so many people.
The United States still have these magic mortgages that I've never been able to fully figure out. Like, oh, they're fixed rate forever. Okay, that's kind of weird. How does that work? Don't think they're going to last through this crisis, by the way. But so they interest rates, especially in the United States, but then food, energy, and that's it, right? And
insurance increasingly, unfortunately.
And insurance increasingly, yeah, true in the United States. But I mean, how do you do it? So you already have these bonkers prices. Like, I mean, there's videos on Instagram and Twitter about people trying to go and buy burger meat, and how much is it? Like $10 to make some burgers or something? Like a couple of burgers.
National average is $7 a pound, but that's across all grades. You want the good stuff? Yeah, it's $10 now.
Like, and then imagine that's 15. Like, at a certain point, you're just, like, breaking people. And, you know, I keep reminding everybody, like, the two big revolutions that you learn about in History 101 are the French Revolution and the Russian Revolution. Both were bread riots. Mm-hmm. Like, ultimately, both were bread riots.
like
That's
the Arab Spring? Right.
That was a bread riot, too.
The Arab Spring. Right here. Riots in Egypt that everyone saw on TV.
Yeah, but I mean, I'm almost certain it'll cause instability in the rest of the world. I mean, the Middle East, like, I saw in Jordan yesterday or today, a bunch of, like, academics and intellectuals signed a petition against the government for having U.S. military bases there. Wait until the hungry crowds join in, guys, actually, on that one. But I'm worried that we might get hungry.
Yeah, we might have regime change across the Middle East next year when food prices spike.
Crowds in Europe and America. Like the biggest revolutionary force is being hangry, as they say. That really
I can relate.
Marx was wrong about the proletariat driving revolutions. It's just like someone who missed one meal. They don't even have. If they're starving, you see, like in Ireland in the famine, they won't revolt because they'll just like keel over. They have no energy. But if they just missed one meal a day, fire it up, you know.
The one danger I'd say to you, Gata Naranja, is even if the fundamentals of the company are solid, if you're talking about if the market is in a bubble, like stocks like Amazon, Google, they had solid models. They were good long-term companies. But if it ever gets to the point where everyone's piling out of AI stocks, yeah, even the good companies are going to get dragged down with the bad. The bad will go down to zero, and the good companies will survive and go up with time. But you want to try to avoid the top of a bubble if you can.
Yeah. I mean, what's the saying? Every country is 9 meals away from a revolution or anarchy. I think it's the statement. But yeah. No, but that could be coming. So this is really a poly crisis. I mean, I've been focusing on oil because that's what everybody focuses on. I actually think it's more, you know what? I don't consume any oil. I consume oil refined products. And so I track oil, but actually I care about what's going on with jet fuel, kerosene, diesel, shipping fuel, gasoline, the products. On that
front, that's where the problems will start.
Philip, I'm starting to get anecdotes from people saying here in the U.S. that major purchasers of diesel, like for railroads, they're having trouble sourcing stuff in certain locations, right? And I think we see that in the spreads that are out there. Heating oil here in New England, in New York Harbor, is the highest it's ever been in its whole life. And that's going to make things really hard for people this winter who use that to heat homes. We still burn oil for
everywhere. It's going to be an expensive winter in terms of heating your home.
For heat in New England. It's very archaic, but it's a thing.
I used to live there, I know.
Oh, yeah. Yeah, we do everything backwards as possible.
And that hurts consumer spending and increases defaults on subprime credit cards and loans. It snowballs.
For as long as possible. But what I want to get back to then is, because you said something very interesting to me, is that bonds and oil are linked. Mm-hmm. And I'm seeing yields actually going up pretty handily here today, time of this recording, the 10-year, 30-year up. And we're charting kind of multi-decade territory here for the 30-year, and the 10-year starting to get close. How do you connect oil and bond yields?
I mean, bond yields are just forward inflation indicators, right? I mean,
I was just having the idea that if the Treasury has been selling if the Fed has been selling put options on Treasuries like they discussed doing in their Fed transcripts, and then they were worried about colossal losses on those put options on Treasuries, well, they unwinded the trade right out here. Let me see. I need the graph now. I right away. U.S. Treasury yields. U.S. Treasury yields. $30-year. When did they start going up? No, I need current time tools anytime past month. Maybe he's going to show one in the video. I need. I'd just be interested to see if they started going up right when oil was going down, because that would maybe be evidence of them unwinding their put position, their position in derivatives in Treasury market. Let's see, 10-year, 30-year, July. It doesn't say the exact date. Oh, June 20th, and then oil that cratered around. Yeah, it was cratering around June 30th. So, and Treasury yields started going up as oil is falling. Treasury yields start going up. So I think they bought back a lot of put options on treasuries, and that sent yields higher. Because, like I said, getting out of their derivative position, that's one thing that drove it higher. Because it started before oil started going up back up again. I don't know. I'll look at more precise graphs later off stream.
You know, you can do a more sophisticated version of that.
Yeah, no proof, no speculation, but I've shown this on stream before. Here. And then move this over here. This June transcript 2003. Ultimately, success would hinge on the quantity of options sold, how big a bet the Federal Reserve were willing to make. The more options sold, the greater the chance they would have a desired effect on long-term rates. Now, in current scenario with federal debt is out of control, how are they keeping long-term rates on like 30-year treasuries down? I'm certain that they are selling. They are messing around derivatives to keep the long-term treasury yields down. They started in the 2008 financial crisis. Now, that is a Federal Reserve transcript on the Federal Reserve's website that I just showed, Gata Naranja. You can't get more official than that. And they're straight out lay out their plan to sell put options on treasuries to manipulate yields down in that transcript. So it's not a conspiracy theory. It's on the Federal Reserve's website.
Two, or yield curve. You can go into all the stuff that bond traders will sell you to justify the fact that they have a PhD in physics and they ended up trading bonds. But at the end of the day, the reality is it's inflation. It's forward-looking inflation. That's what everything except the federal funds rate and probably 3-month notes are. So basically the way the bond market works is the Federal Reserve sets the short end of the curve, as they say, the overnight rate, almost basically sets three-month bills, which are increasingly used to finance the US government, interesting in and of itself. But they set 3-month bills, and then as you go further out the yield curve, 1 year, 3 year, 5 year, 10 year, 30 year, the Fed has less and less control. And as you go...
Except they hatched this plan back in 2003, like I just showed. On the Federal Reserve's website, you see right there. In this way, long-term yields could be influenced. We could sell put options on long-term Treasury securities at strike prices associated with long-term yields. So they definitely planned to manipulate the Treasury market by selling put options on Treasuries, and everything else that they outlined that they were going to do in that Federal Reserve transcripts, they did. So I'm positive they're doing that too.
Further out, more and more it's forward-looking inflation. Now, there could be a moment where the Fed comes in and tries to control the yield curve. That's an interesting question. It's something I've thought about a lot, whether it's possible or not. They tried once upon a time before. It was called Operation Twist. I think it was in 1963. We could talk about it if you want. I used to study this stuff when I was aspiring to be a monetary economist, delusionally. But right now, my sense is that the Treasury's accepted that they don't do yield curve control, and so they are doing a very aggressive form of what you might call forward guidance, and what they're trying to do is ensure that the components of forward-looking inflation are under control. And the biggest component of forward-looking inflation is very simply oil, energy.
I'm going to try to contact these two about that Federal Reserve transcript. I'm sure they'd be very interested in it. It's one of those transcripts, I can't believe no one has ever covered it in any news media. It's a bombshell of a Fed transcript.
It predicts inflation, 90% of the time. So no, it's not the only cause of inflation, but it is actually the major cause of inflation in the United States these days, and in Europe to a large extent too. So I think basically The Treasury's got itself. I think that they've got stuck into a bureaucratic feedback loop, in a sense. That's actually my guess here. That on day one, for reasons, they decided that they'd make sure that there wasn't a bond crisis under Trump, because as J.D. Vance once said in an interview, that was a huge concern when the Trump administration was coming in. Basically, that they'd get, as I used to call it, trust after the
Liz Truss
attack, after Liz Truss attack
Yeah.
on Liz Truss, which was a giant conspiracy, by the way. She's correct about that. Not that I don't even agree with her tax cut. We can get into it, but she was right. They ganged up on her, and the Europeans have done similar. The Europeans tested this stuff
Who
back
was
in
the
bond
day? Is that
crisis.
the bankers? Is that
I think it was the Bank of England ultimately that did Truss in. It wasn't, and the funny thing is, I know pretty much how it happened. It wasn't a big conspiracy. It was she communicated everything badly.
By the way, Gata Naranja, when I sell a put option on Marvel, do I manipulate its price? No, that's you trading on a third party. But what would be, let's say you have a company. You know what credit default swaps are? That protect you against default? Let's say I'm a company. I go out into the market, I sell debt. Now, in order to get a very low interest rate on the debt I'm selling, despite being a risky company because I'm not a good business manager in this case, I secretly go out on the market and then I sell credit deep swaps via third parties, hiding my identity on my own debt. That means I sell insurance guaranteeing my own debt against default. Do you see the problem with doing that? It's if I default, those credit default swaps are worthless. Yes, it sounds fishy. So the problem with the Federal Reserve selling put options on Treasury, it's basically the government selling default protection on Treasury securities, which the government is issuing. It's driving third parties are buy those put options to protect against a scenario where treasuries would go down. It's fishy. It's definitely fishy. That's why it's not call options or put options themselves that are evil. It's a case of using them to manipulate your own debt. That's the problem.
She didn't have good help. There was loads of problems in the incoming government, the cabinet, and then the bankers, the Bank of England especially, realized how much power they had. And it was really just a case of not doing anything and leaking a lot of stuff that increased the crisis, plausibly deniable leaks, source and tail. So it was the media actually played a very large role. They really didn't like her. So the concern, basically, I think, when the Trump people got in, is that this will be tried on them. And I think there was actually significant evidence that it might have been. Now, today it's redundant because they've decided to, not use the tactical warhead, but like the Zara bomber on themselves, like the biggest nuke ever made. So it doesn't, who cares? And at this stage, the Wall Street crowd and stuff are so terrified that they just want to survive the blast, So because everyone knows this could collapse the US dollar and everything. But so basically, I think they went in with that mindset and they said all hands on deck. We got to do yield curve control in effect, and I think that merged with the previous manipulation that was going on since the closure of the Red Sea and the initial phases of the Middle East war, and we are where we are today. And I think the whole thing's on autopilot and going off a cliff basically.
I think so too. I think different elements of deep state aren't as coordinated as it once was, and things are breaking apart behind the scenes.
Any sense that the bond vigilantes are anywhere to be seen? Because I watch the yields kind of tick up and down on a daily basis with oil prices, and I don't consider that bond vigilantes. Bond vigilantes are looking out much further, as they say. Stocks are for show, but bonds are for dough. These are the smart guys and gals, right? They're the ones who are really forward-looking. I don't have the sense that bonds are really telegraphing what I think is coming yet, but I might not be the smart guy in that story. So,
no, they're not. They're not. This is part of the kind of trustification.
Yeah, that's one of the things people have issues with 9/11 is there were some people that heavily shorted the airline stocks before 9/11 happened. And yeah, the options were used. It's very suspicious. Who was doing that trading? It was never investigated.
Thesis. I think there was an intention to put the screws on the Trump administration fiscally, but I think some people that wanted to do that knew that they'd have that whole thing under control in some sense. Now, you never really have it all under control, but in some sense, at least they had it under control. No, everyone knows that this is out of control. I think the great and good on Wall Street are absolutely terrified. I mean, the AI bubble is really coming. It's cracking up right now. So just to take the news today, Microsoft traded up, I think, 15% yesterday. So that's because they're AI is apparently doing great. Maybe it is. I don't know. I've never
Given how Windows 11 is doing, their AI is still has some issues.
done an analysis of Microsoft. But a day later, or the same day, this kid's AI fund blows up and everyone's laughing on Twitter. That's called market fragmentation, guys. That happened in that happened in 2000. So like pets.com gets obliterated and Amazon keeps rolling. Because, out of all these bubbles that are technology based, you always get a couple of solid companies, right? And Microsoft, I don't know, but I wouldn't bet against Microsoft. They're pretty good at what they do. And if you look at the kids,
Not anymore. Just go and watch any of the videos about people like losing their shit over Windows 11. People like getting so desperate they install Linux.
Folio, sorry, I can't remember his name. He has some bizarre German name. He all his stuff pretty much hit Intel, and then everything else was like these companies I'd never heard of in my life.
By the way, I don't think Microsoft is going under. I just think they might take a hit to their profits at some point.
He was clearly like a kind of a tech geek guy who like was really into the technology aspect, investing in stuff based on ideas or whatever. So, but that says to me there's market fragmentation going on. So everyone's kind of aware on Wall Street and in the Treasury, because it's just Wall Street guys mostly working in the Treasury, that the AI bubble is on its last legs. Now, here's something that needs to be considered if you want to understand what's going on with the U.S. economy overall and with the dollar. So typically speaking, the United States obviously runs a very large trade deficit, a trade deficit that no other country except Britain would get away with. And Britain's a weird, complex case that you can talk about, and it won't last for much longer. But the United States runs this dollar privilege in a sense, and that allows it to run a very large trade deficit. Now, usually it finances that trade deficit by selling debt, mainly U.S. treasuries. And that was the case since the trade deficits opened under Reagan, right? I mean, they opened in the 70s, but they opened large.
But nowadays, people are getting more nervous about treasuries, so they're financing it through equities.
Largely under Reagan, it was called the old twin deficit. And that, ever since then, they've been financed by government bonds, by selling government bonds to foreigners, because the trade deficit has to have, it's a liability, it's an asset because you're getting stuff coming in, and it has to be matched by a liability, like it's accounting. And the liability, you can look at the trade accounts, it's not hard if you know what you're doing. And the liability that typically goes out is like 80-90% bonds. That hasn't been the case since the pandemic. It's now majority, I think it must be about 60, don't quote me on the exact numbers, but I think it's 60 to 70% equities. We saw that briefly in 2000.
That's bad.
To the extent today. And that's, if you remember, like the 70s.
And it's the AI bubble. In other words, we're financing our trade deficit by people coming in and investing in the AI bubble. And if that AI bubble bursts, how are we financing our deficit then?
Cut a deal with the Trump administration.
By the way, with the way stock market works and short selling, even investments in equities ends up generating a lot of demand for treasuries.
Prop up the AI sector. That's part of that story, but that's just the kind of a story part of it. Like, they're selling all this stock, and it's the AI bubble. Now, I think what's going to happen is if the AI bubble pops, the trade deficit, there's going to be like this suck extent, and the trade deficit's going to try and close. And the way that the trade deficit closes is the dollar loses value really quickly. Now, maybe if the AI bubble pops and all that equity stops being bought, the foreigners will do the old flight to safety, get scared, and start buying US government bonds. But I think that there's very good reason to think that that's not the case anymore. Flight to safety now is gold, as we were just discussing. The central.
I agree. It's strange that happened. In 2008, it was definitely $1, but the world has changed.
Banks are buying the gold. I don't think China or South Korea or Japan are going to say in a crisis, I'm scared, I think I'll load up on dollar assets. I think they said that in 2008. I think they said that in 2000. But I don't think they'd say that today. And so then what you'd have is a dollar crisis, in effect. And I think that's where we're heading, actually. I think it's almost inevitable. Maybe I'll eat my words and the AI bubble pops and the foreigners get spooked.
By the way, I don't have anything against option in principle, except there's one issue. Call and put options have been around for centuries, and there's derivative markets in different places of the world. The last big one was actually in London, and it collapsed when US went off the gold standards, and everyone who had options at that point, they sort of became worthless. So the problem with option market is they function great until they don't. Like the current options market in America and globally is backed by US treasuries. So if the treasury market goes down, the option market goes with it. That's just the way it is. And so, which will happen one day. So just keep that in the back of your head is don't use options to bet against the dollar, because if you win your bet and the dollar crashes, your options will be worthless. That's the one bet you can't do with derivatives.
Till they start stocking up U.S. government debt, flight to safety. But it's hard to see.
Well, that's fascinating because yeah, I mean, I can't detangle the AI bubble. I'm not sure anybody can. You have these very complicated circular financing charts, right? And so
Yep, you can selling options. If you do it and you know what you're doing, good on you to make money that way. And by the way, when one options market collapses, another one comes up somewhere else. So you don't need to worry about there not being an option markets.
Amazon reported blowout earnings this morning, and I'm just like, oh, God, if I give me 5 hours, I'll dig in and I'll probably find they've got some really weird account receivables in there from a subsidiary that they funded and they put equity in, which backflowed into purchase orders from it's like, I feel like we're an Enron on steroids at this point when it comes to this whole topic,
Yeah.
But I saw this.
It's totally circular. It's not real.
How could it be? And by the way, China undersells with other open source models. We're playing with all these models in house. Kiwi 3, very good. DeepSeek, very good.
China are also in chips as well. They're focusing on economizing. So DeepSeek, the big development was that it economized. And if you looked into loads of the business models of these AI companies, it was an assumption that you needed always more physical space on a linear basis, one-to-one. So there was no notion that as the technology went on, you'd economize and you would need, say, half the data center for the same amount of power. It was always one-to-one, right? Like, that's a stupid assumption. Well, it's not. It's a dishonest assumption, let's be honest. Like, the people making that assumption were just being dishonest and fooling people with it. Of course, the computing efficiency would rise as you make investments in this technology. So the whole thing was doomed from the beginning.
2 terabytes. That's what my previous laptop had in it. Current laptop, also 2 terabytes. The hard disk space hasn't gotten cheaper. If 4 terabytes was affordable, I would have gotten that. But we seem to have hit a wall there. So there are some walls in computing that take a long time to get over. And hard drive space, I think, is starting to hit one of those walls.
I mean, I still think it's more likely that a company like Microsoft hasn't completely hollowed itself out. But maybe Bill Gates is getting old and he's focused too much on vaccines to save the world or something.
Mosquitoes. We don't know.
Maybe he's not paying attention like he used to be. I don't know.
I'd love to get your take on this. And this is a very short N of 1. This is from yesterday, July 29th. But I found this, and this is from Tavacosta. He says, something is fundamentally broken when yields surge and your currency can't rally. In fact, it almost looks like mirror opposite. So this is a 30-year yield spiking here, and the dollar was falling at the same time. Again, this is just intraday. I mean, but I'm going to start watching this carefully because one of my big theories is it's over, right? The fat lady has sung when you see both your bonds being sold and your currency being sold. That means all those people who are holding all your treasuries offshore, they're selling them and taking the resulting dollars and selling those too.
Yeah.
Right? Potentially. Now, I know
that chart is a small version of why I don't think there'll be a flight to safety. So actually, he's working in the administration.
True. If flight to safety was in effect, Treasury should be going down now with all the war risk in both Ukraine and Iran.
Of the State Department, but the economist David P. Goldman floated a chart before he went into. He's a very friend of mine. Floated a chart before he went into the administration, showing the correlation between I think it's Treasury inflation protected securities TIPS and the US dollar and the rates. So it doesn't. So you shouldn't be using a pure 30-year rate. You want an inflation-adjusted 30-year rate, and then you can basically explain, if you know what I mean, the dollar price. And what he was showing is that I think it was since 2022, it no longer falls along the linear line, right? And what that means is, what you've just said in the chart is interest rates go up and you can't attract capital anymore. Well, then your flight to safety mechanism's broken. The whole trick, I hate this dollar reserve currency talk. It's stupid. It doesn't understand.
Oh, I was making that same points back in 2008, 2009. Yeah, it is stupid.
And what the dollar is. It's the reserve currency is just that's an accounting residual.
Yeah, one part of that argument is there's not enough gold to function as a reserve currency. My counter to that at the time was, well, if gold prices go up enough, then there is enough gold. You just solve that by increasing the gold price.
Of dollar hegemony, right? That may sound completely weird, but what I mean by that is the fact that the dollar is hegemonic is the reason that there's a ton of reserves in China, because they're willing to accept the paper for the plastic stuff, okay, for the manufactured goods. That's just a residual. That just shows that, like, dollar hegemony is working. So the reserves...
Yeah, that is one thing gold bugs say, that gold doesn't increase. But that is not entirely true. It does increase and decrease. That means when the gold standard was in effect and the dollar was linked to gold, there was inflation and deflation. It was caused by like the wars in Europe, World War One in Europe. Central banks in Europe selling all their gold makes a lot of gold in the United States. Suddenly, there's more money in the United States because there's more gold, and you have inflation in the United States. Then after World War One, Europe tries to get back its gold, and you have deflation in the United States because you have gold being pulled out of the country, dollar currency shrinking. So the gold does change relative. There is also the fact that, yes, paper currencies are always in perpetual decline, so gold keeps its value in a way relative to those. But gold itself does go up and down in value. Like central banks around the world decide they want to suddenly own gold, then the real purchasing power of gold goes up too.
Itself is a big distraction. It's stupid. And actually, the really good economic historians on reserves, like Barry Eichengreen, who's the lead expert in this, and there's no dispute, he's totally mainstream.
The supply of gold on Earth pretty much doesn't change. You're right about that. All the gold mine is, except for a tiny, tiny bit that is used in high-end electronics, but that's negligible. Mostly, it just sits around in vaults forever. So yes.
Agree with me on this. He's like, yeah, the reserve thing, like, don't get too hung up about it. It's about the hegemony. It's about being willing to accept the dollar in ways that you won't accept other currencies like the euro or the sterling or, even Swiss franc or something like that. And basically, the way that the trick works is that anytime there's a crisis, especially, because it's usually crises that will vastly change the economic picture, anytime there's a crisis, what happens is that foreigners, as we've just been saying, flight to safety, interest rates rise a little bit in the United States, pull in a bunch of capital, and it drives the interest rate back down, and it drives the dollar up. So after 2008, the dollar rallies, despite the fact that QE's in place, and there's quote-unquote printing money, which is a little bit misleading, but, in theory, if you're doing this easing money...
There was, I think, a little bit more shenanigans going on behind ending the 2008 financial crisis. I think the Euro CPP, the clearinghouse in Europe, going online, that marked the end of the financial crisis. Let's say that it allowed primary dealers in the United States to reroute capital from Europe, and also you have investors around the world, like in the Middle East, that have money in Europe, and all that money, any money held in Europe, could be rerouted to the United States, and it ended the financial crisis.
Monetary policy, why would the dollar rise? The dollar rose throughout the QE period. So you got zero interest rate policy, low borrowing rates, and the dollar was going up, not down, right? That's the trick of dollar hegemony. The dollar hegemony just means you get low interest rates, you get low borrowing rates, and a strong dollar in a crisis. Well, what your chart is suggesting, and the more comprehensive one, which is David Goldman's one, which shows the TIPS yield and the correlation between TIPS and dollar, is that that's probably not going to happen anymore. So next time around, you're going to probably get, rather than low interest rates and a stronger dollar,
you're going to get $10,000 gold.
You're probably going to get high interest rates and a weaker dollar. And of course, that's what most countries have to deal with. Like, that's why the United States has a privilege that other countries don't. Most countries, when a crisis hits, their interest rates go up and their currency goes down. And it's a giant pain. That's what happened to the Asian tigers, et cetera, when their bubbles blew, right? So I think that chart, and the more sophisticated version of it, which shows it over time, is strongly suggesting that US dollar hegemony is already gone. It's been gone since 2022. It's just we haven't had a crisis to test it yet.
That's
we're going to get one very shortly.
So what else? So the other thing I tracked like a hawk and a half for 25 years is the price of gold, right? And for most of the 25 years, all I needed to do was look at the inverted 10-year real rate, right? They tracked each other perfectly, like tick for tick, like forever, like small departures that lasted a week or two. But otherwise, that's how you could explain the whole thing. And then, of course, the United States seizes Russia's sovereign reserves in February of 22. And shortly thereafter, later that year, that 20-plus year relationship broke. Just never look back. You just watched the 10-year real yield was doing what it was doing. Gold was doing something totally different. And now you're saying that as well, you see that departure on that more sophisticated chart, the TIPS chart.
This whole U.S. dollar hegemony, the system is breaking.
You're talking about, those are connected then, right?
With the dollar. Well, this is how we understand that. And I'm a recovering anti-gold bug. So like I was like not, because I like think chartalism is really interesting and stuff. But so I'm saying this as somebody who was not 10 years ago saying that gold was the real money. Now today I've changed my mind because the world's in chaos and it's clear what's going on. But this is a mea culpa in a sense. That's what I'm saying.
We forgive you.
There is a link, clearly. That is the link between gold and the dollar, right? You just said the gold used to be a forward-looking inflation trade, right? That's what the TIPS spread is. It's forward-looking inflation, right? So, and as you say, it tracked gold. So people were trading gold based on inflation. Now, was that rational? I don't know. I'm not sure, but it was what it was. And then, of course, the TIPS yield is connected to. It used to be connected to the dollar, if you see what I mean. So there was a little ecosystem here that wasn't much commented on. Again, I think David Goldman was really the main person who was tracking this for a very long time. And now we're starting to see, as you say, those relationships break down. And the way I'd phrase that breakdown in the relationship is that previously, the dollar was the numeraire in a sense. It was gold was pricing itself off dollar inflation. Do you see what I mean? So in that circumstance, the dollar is the, as they say in economics, the numeraire, the thing that's trying to track the actual value of things. The current situation looks more to me like gold is the numeraire, if you see what I mean. I think that's actually what's happened there. And so now gold is an independent variable. And I'm not saying the dollar and inflation are dependent on gold, but they're dependent on each other, and it's a little bit like Baron von Munchausen picking himself out of the swamp, with his shoes or with his own hair. I can't remember which one it is. It's a little bit like that, and it's a closed system, and that's what most of the time most countries experience with their currencies, with fiat currencies anyway. So I think basically the gold has broken free of its dollar shackles in a sense. That's what.
Yep. You just need to look at a gold chart to figure that out.
Happened in the past couple of years, and what killed all those correlations was central bank buying, of course.
Yeah, and I think as well, weaponizing the SWIFT system, it really got the BRICS going. And I think 3 years ago, if I have the data right, China's yuan was 2% of cross-border trade volume. But this last year, it was 8%, which is, in percentage terms, it's a huge increase.
Huge.
So the yuan's coming along. And then China says, hey, by the way, if you have yuan, we're going to set up 2 offshore locations where you can swap it into gold, right? So they're clearly, China's making a move to say, we understand trust is important. Don't trust.
I think that's how they're, I see, controlling their currency. Because China forever was undervaluing its currency. Well, now they're using gold to accomplish that same purpose. Okay, I'm not going to go into it in detail, but this is interesting.
Does trust gold, we'll always have this as backing. And them's fighting words. Remember what happened to Gaddafi when he tried to back his currency?
Yep.
The dinar with gold? It did not work out all that well for him.
Well, China's a little bit more of a powerful military.
Yes.
America expanded all its JASMs in the Middle East, so good luck going to war.
If the United States can't take out Iran, it can't take out China.
Chinese in the South China Sea. Also, you see their recent military technology.
Hasn't this been a war on China's energy source more than anything? Shutting down the Strait of Hormuz, which is fundamentally a U.S.-Israeli project at this point, that hurts China the most if it stays that way. Well, Japan too. Anybody in the Pacific.
Chinese don't see it that way. I said I worked in foreign affairs for the past 2.5 years in Hungary. So I was in China a lot, and I know a lot of people in China, in government, private sector, financial markets, everything. And of course, it was the first thing I did. I said, hey guys, why aren't you putting pressure on Iran? This is ultimately, I know the oil is fungible, and I know that the global oil market is unitary. I'm not stupid, right? But at the end of the day, this is oil that is going physically from the Strait mainly to you. And you have enormous leverage over Iran, because really Iran's biggest ally isn't Russia, it's China, actually. If you understand, where those missile designs came from, for example, the targeting ISR, I don't think is mainly coming from Russia. I think they're testing out the Baidu systems, which are better than the Russian GLONASS systems. We could go into that. I know quite a bit about it. But the Chinese, so they have a million cards to play. Now, I knew a lot, because I used to talk to people in China about it, the relationship between the Chinese and the Iranians, and it boils down to this. They were very friendly, and they were very close allies, but the Chinese were always frustrated because they used to tell me the Iranians are very proud. They still think that they're this civilizational power. They're Persia, And so,
well, they are, but that doesn't mean you don't need help.
So that's, for example, why they never accepted Chinese air defense systems, which is one of the most irrational things. Why don't they have an integrated Chinese air defense system in even long range, one of these HQ2 systems or whatever it's called? And basically what I learned was they're just too proud. They thought that they could make it themselves. They thought, well, we can make the missiles ourselves, so we'll make our own air defense. And they have actually made pretty good SHORAD systems that they're hitting MQ-9 Reapers with. Yeah, but they haven't been able to crack a Patriot clone, which is what the HQ2 is, or an S-400 clone. It's probably closer to the S-400, to be honest. So the relationship isn't Iran does, Iran's not a vassal. That's the way I'd put that, at all. But they weren't even trying to apply pressure. And, I asked and I talked to as many people as I could, and they were very mum about it, actually. And my sense coming away from it was, yes, this could be a pain for us for, 6 months, a year, 18 months. But ultimately, it's going to solve their main security issue, which is China's main issue, and it's Taiwan. And it's going to solve...
Yep, the United States wasting a lot of weapons in Iran.
It in two ways. Number one, the American military would have always lost a war in the South China Sea pretty brutally, really brutally, and we're seeing that now. If they, the South China...
Yeah, if we had trouble against Iran, we would have 100 times extra trouble against China.
Sea is just a more advanced version of Iran with more missiles, better quality missiles, additional, full integrated air defense system, probably the best fighter jets in the world now, air-to-air missiles, probably the best air-to-air missiles. So it's like Iran
10x the manufacturing.
United States would not have air superiority over China.
Well, yeah, yes. And they can turn this stuff out. Like the US can't turn out JASSMs like this. So Iran is just like a kind of a China from 2000. You might think of it that way. And even less than that, because even in 2000, China had pretty integrated air defense. So there was never any chance that they'd win it. But if they hemorrhage all these weapons, and if they learn that lesson, like I find in these military affairs things, like even if you know what's going to happen, it's the experience that teaches. It's never the analysis that teaches. It's always the experience. So on the one hand, from a Chinese perspective, they're not going to, America would never try it in the South China Sea after this, both because they won't have the munitions and because, the Pentagon staff will just go, this is like Iran times 100, right?
Yeah, he did the exact same example I did.
Like, you think the aircraft losses that you've seen with these guys, like, we're not going to have an air force left. Anything we fly in there or land in there is going to get smoked, right? So that's one thing. And then the second thing is Taiwan is completely 100% dependent on energy imports. So the biggest strategic petroleum reserve in the world. It has the biggest energy reserve.
Taiwan might want some of that oil
In the world by a factor of 2 or 2.5. Like America's is still actually very impressive, but I think China's on a GDP basis or something is like 2 times or something. It's the biggest in the world. Taiwan has nothing. And a decent half of Taiwan is open to relations with China. They back the Kuomintang, who, by the way, the Kuomintang candidate was in Beijing a couple of weeks ago. So what do you think is going to happen there? It's pretty obvious. Taiwan is going to run out of energy, which would have happened, by the way, in a blockade scenario, which was China's backup plan for this. They were never going to invade the island. Their plan was to, you can read about it in Chinese military textbooks. But the
blockade it. That was one plan China was floating to deal with Taiwan.
The council wrote something about this a year ago. They finally figured out they're going to blockade the island, and then food and energy couldn't get in. Well, that's an aggressive act, and it makes China look bad, and it risks a war or something like that, or maybe Japan getting involved, which they couldn't do anything. But it's a pain, right? And what if the war spread to the Korean Peninsula? It's a nightmare. The Chinese are the most cautious people on the planet. They hate any change, and it's like Confucian sage governance theory. And so why not let them why not let the Iranians blockade Taiwan? That's what they're doing. And so what's going to happen is that the lights are going to go out in Taiwan. And whether it leads to an immediate collapse of the current pro-Western government or not, at the end of the day, the Taiwanese are going to realize that they need access to energy supplies from the mainland. And that'll come with a big trade arrangement. And the trade arrangement, like we do in the EU, will immediately create a single market. And that's it. Game over.
That makes so much sense.
That is a smart plan if China's going for that.
And China potentially could also be savior to Japan in remove another giant obstacle in the region, right?
I bet people in Japan are talking.
They're talking hypothetically, but by reducing its imports of oil, China is already bailing out Taiwan, Japan, Korea, because the oil that China would have imported has been going to those places. So I don't know what Trump agreed to or how he convinced Xi to do this, but China reducing its oil imports for that 2-3 months period really hurt its own interests.
About that, and South Korea. I mean, right?
This makes sense because I came across this morning. So I'm looking at July seaborne crude oil imports, and China's down 4 million barrels per day compared to the 2025 average, but South Korea's up 982. Whoa.
Huh.
When you add all this up, China did all the heavy lifting. The whole world is down 2.8 million barrels, and China did all of that. And so when you look at who was able to preserve their imports, India, South Korea, this has got to be part of that quid pro quo we were talking about.
Yeah. But China is now buying again. Its imports are going back to normal.
Yep. Hadn't seen that. Very interesting. They hold the cards there, man. They really hold the cards in Southeast Asia right now.
Yes.
I think things are going to change so fast there, and it'll be just an energy crisis in South Korea and Japan. And you got to remember, like the animosity between the Japanese and the Chinese is truly intense. But the Koreans, it's not quite. They kind of got shafted by the Japanese in World War II. And the North Koreans obviously were backed by the Chinese to kick out the imperialist invaders and all that kind of thing. So there's going to be big changes there. But I think China's going to achieve it without firing a shot. And I think that I think America's just blundered so hard into this Iran thing. I think they could have wound down. I was always advocating for, winding down the Japanese theater and so on. I used to argue with some people who are in the administration, pretty senior positions now. But, I thought that...
The problem is we need to exert pressure on all these governments in Southeast Asia, because Japan, for example, holds $1.1 trillion of U.S. treasuries, and we don't want them to sell that. And so, like, our intervention to prop up the yen is an example of that. If we lose control, lose influence in Southeast Asia, well, they're going to start selling treasuries, and then it's game over for the treasury market.
Americans had enough leverage in the region that they could cut a pretty good deal on that, actually, and maybe keep, for example, increase investment into these places and make it maybe a kind of a joint project, or something like that. Like cut a good deal. I don't think there's going to be much of a deal on the table right now. As this kind of thing shakes out.
Yeah. At least 10 years ago now, I was in China and I was talking with a fairly high level official, and he sort of walked my Western self through how things really work. He said, "Look, Chris, the business of the United States is war, and the business of China is business. We make friends, we make deals, very cautious, but again, the United States, so we had this gunboat diplomacy, they have checkbook diplomacy, fine." I had waggishly said for years that if I woke up one day and a U.S. aircraft carrier got sunk, run, don't walk, get rid of your dollars, right? Because it would take time, but that was sort of like the starting bell for U.S. power is over. We can't project power like we...
Careful language can be boring at times, yes.
Thought anymore. And all the countries that were sort of bullied into submission go, oh, new world, and off they go, right? Mm-hmm. I think we had the equivalent of a sinking of an aircraft carrier in the sense, what did that represent? That represents to me loss of power that you can project. I think Iran just proved that, with the way drones and missiles work today, I just think navies are not all that useful as they used to be. And
True.
That's kind of, I think that bell got rung. I don't think there's... No,
you're absolutely right. And your assessment was correct at the time.
Which makes U.S. Military power projection much less potent around the world.
The error is just you thought aircraft carriers were important. And they're not. They're not using them in the Middle East. They're flying from...
They used to be very important.
Air bases. And they're using standoff munitions. Where's the aircraft carrier? They used it a little bit in the first phase of the war, but they can't get near enough because they're big floating targets. I was always kind of skeptical of the aircraft carrier doctrine in the age of missiles, but man, it underperformed in this war. But yeah, no, the
problem is now aircraft carriers, because drones and missiles have gone so good on part of Iran, have to stay so far away that their jet fighters on the aircraft carrier can't make their way to Iran, fire missiles, and come back without a refueling tanker. And a refueling tanker, and that needs a land base. And if you need a land base for your aircraft carrier to attack, it sort of undermines the entire purpose of an aircraft carrier.
The debasification of the Middle East is the equivalent to the sinking of the aircraft carrier, 100%. Because it's just logical, right? Now we know that all those bases in Southeast Asia they're just targets. That's all they are. They're not assets, they're liabilities. So then what is American global power? I don't understand what it is. Oh, it's to open up shipping lanes. The Navy's going to open up shipping lanes. Okay, so It's these bases we have all over the world. What is it? So yeah, it's over. The whole world's going to look different after in 2030. Completely different. People have no idea. But my real fear is that the West, and I mean Europe and America, maybe not Australia and New Zealand because they'll probably become Chinese, but and Japan is in such a tough spot. They're going to go down the toilet. Actually, their living standards are already cratering. But the West, Europe, I feel America, we're
bad for Japan.
We're going to see the hit to living standards.
The reason Japan's economy has been a quagmire and not gone anywhere for decades is because of the carry trade. The investment, the way an economy grows is by investments in that economy, like new factories, new businesses, new technologies. But Japan hasn't been making any investments in its own economy. Instead, through the carry trade, it's just been buying U.S. stocks, U.S. bonds. All the money's going to the United States. The investment's all going to the United States. And if you don't have any investment in Japan itself, then, of course, the economy goes nowhere. It just stagnates, which is what it's done ever since its yen carry trade was set up.
And our political systems are really unstable, dangerously so, in different ways, but both are very unstable. And I'm really scared for the future of the West. I think Europe's going to go through a century of humiliation, to take a Chinese term. I think America has better fundamental prospects, but there's a lot of Here's the thing I would say about comparing Europe to America, because I lived in both places, and I think about it a lot. Europe obviously has much more fundamental problems in a sense, in that it doesn't have energy security. That America doesn't have full energy security. That's propaganda, but there's a lot of oil in the ground and gas in the ground. Okay, and it's got Mexico and China, or Mexico and Canada, which are relatively controllable, Mark Carney aside. So that's a pretty good setup in a sense, and it's food independent. We could comment on the quality of the food, but it's food independent. Europe is actually, it's okay for food, not okay for fertilizer and energy. It's just kind of a basket case. That's why it was always more logical to have Russia in the tent, obviously.
Europe has a fundamental resource problem. Yes, but not completely. One reason it has a resource problem is because it has an environment activist problem, the Green Party problem, a mine coal problem, a don't drill for oil problem, a don't have factories that pollute problem, endless regulation to make sure that doesn't happen. So it's stymied that way. If Europe was actually allowed to drill for oil, for example, to mine for coal, to actually produce stuff, it could.
Because that's actually the natural energy supplier of Europe, and part of the US strategy, in my opinion, Europe was to actually cleave that relationship.
Europe has been lowering its food production capabilities and increased the insecurity. Yes, it's been doing that. But that can be reversed. The reason civilization took off in Europe is it's actually a very fertile area. You can grow a lot of food there, a lot of fields. It could be a breadbasket, just being hemied by EU regulations, etc.
But
carbon taxes on farmers, etc.
And become the energy supplier, basically. And but here's the thing. So then all marks are with America, right? But then you have to take a qualitative point of view, right? And here's my kind of like America hypothesis, that in Europe, GDP doesn't mean as much as it does in the United States. And what I mean by that is, and you'll know exactly what I mean, the United States, much more human relationships are mediated by commercial relationships, if you know what I mean. So like you could go from the tip culture to everything. Like transactions take place in order for people to communicate. And the simplest one is just the amount of reliance on automotives, right? On cars. Like you need a car in the United States. Otherwise, like there's nothing for miles.
You can't function
for a lot of people, right? So you have to drive to the place and blah, blah, blah. And in Europe, you don't need cars as much. But it goes all the way down the chain. It's just America's a more commercial society than Europe. And so I worry that a decline in living standards means more for the way the average American lives than what it means for the average European. But taken all together, I think this transition between now and the end of the decade is going to be so painful for the West. And we're both Westerners. I don't say it with any
that's what I've been dreading for a long time.
But on the other hand, like anyone that like has their ostrich head down the sand, like you're an idiot. Like you have to be real with this stuff. Like, but it's terrible. But that feels to me where we're going, and soon, like really soon.
I totally agree, because just take one fractal example.
The way I put it, it would be just like it was for Russians after the fall of the Soviet Union, that period of extreme economic pain. It'll be that, except worse in the West.
Sort of play this out. So we've got all these, we're putting all our chips here currently in CapEx into AI, because we're going to get this God in a box, and it's going to be amazing. And we're putting everything on that. If once we have our God in a box that runs everything for us, how are you going to sustain that? Oh, you'll need energy. So if we had anybody thinking at all, we'd be putting in one small modular nuclear reactor for every data center, and we'd have that program running, because that would be a long-term solution. Nope. We're firing it up with natural gas, which is a finite supply. I know we got a lot. But for Europe, the whole trust us, bro, we're going to supply you with LNG. Yeah, the minute we need it more. Sorry, Europe. What did we?
Data centers. You matter less than the data centers, von der Leyen. They're so stupid.
Could they be? I mean, not again.
Europe is fucked in terms of natural gas this winter.
Right,
Maybe they're put there because they are that stupid. Just on this.
But it just didn't have to be this way, because a little bit of long-term thinking. And so I actually get jealous when I read China has a set of nested 5-year plans that go out 25 years across all dimensions of their society. But I look at energy because I care about energy more. And they have dialed in. It's exactly what I would do. It's comprehensive. It's thoughtful. It's strategic. It's makes sense, right? I don't think we have a plan.
The late stage Western system.
There's no plan,
right?
No. Like fracking. Fracking kept the United States running for an extra decade or so. The dollar, by the fracking oil generated from that. That wasn't planned. It was just a lucky accident.
This isn't capitalism versus the state or anything like that. Like, those aren't the debates. This is like how much of your economy is a grifty rent extraction mechanism. How much of it's just for like stupid profits that make no sense whatsoever. Like what you're describing with the lack of planning around the energy and the data centers and just like getting in there with as much natural gas as possible. It's just everyone trying to grab, right? It's just grabbing. It's like, well, we want to build the data centers because we'll get a bunch of capex from this big firm or whatever. And then the natural gas producer can like roll in, usually like bully a little bit the locals to like tear up regulations. Like, I'm not like saying regulations are good or whatever, but you know, maybe even sensible regulations, like tear them up, ruin the environment, run the gas in, get the data center up. And then one guy in the corner is like, there might be efficiency gains. Do we need all these data centers? Shut up. Like, so it's just like everyone's making money hand over fist. And you see it in the GDP numbers. So if you break down American GDP, so currently Europe is stagnant. There's no economic growth. There hasn't been any economic growth for at least since the pandemic, right? Now, actually, there's an ongoing decline in living standards because the inflation isn't capturing that. So the real GDP statistics are just not real. They're losing living standards constantly. America on paper has been growing in that period. But
for the average American, average European, the quality of life is just going down and down and down.
Then if you break it down, it's all driven by investment in data centers. And then when you look at other metrics like consumer confidence or consumer survey data or anything like that, it's as if the economy's been in at least stagnation since 2020. So you've got this weird dual sector economy in America right now. And my sense is you can kind of see it. While the AI guys are partying, and like if you read some of the stuff on their blogs and stuff, they're like, these idiots focused on the Strait of Hormuz, they have no idea how good earnings season is. I'm like, wow, this is out there, like detached from reality stuff. And then everyone else is living in reality. Now, reality hasn't hit as hard as it's going to hit, but everyone else is living in reality. Like gas prices are up, food prices have been vicious for the past 5 to 6 years, et cetera, et cetera. And so there's this weird two-tier economy going on in the United States, but the underlying economy there, I think, is very similar to the underlying, like the actual economy in Europe. Europe's just America without the extensive data center builds, basically, and worse energy problems.
So when you say
worst energy problems, yes.
decline in living standards, what's the mechanism? I mean, obviously, you either default on your debts, you go through austerity, politicians hate it. The other path, of course, is just go through hyperinflation or inflation or whatever, whatever you're going to call it, wherever you draw the line. But you either trash the dollar or you save the dollar, and
there's no saving the dollar at this point.
they're both painful. I have a little bit weighed down in my investment portfolio. I've got some cash, but I'm almost entirely arrayed for inflation because that's just what history tells me is coming next. And that's how it's going to affect people. So the way I think this is going to happen for people on my end is I think gas goes to 15 a gallon, whatever, and your paycheck stays kind of the same. And that's what happens. Your living standard.
Doesn't that sound like it sucks? It's called stagflation. And it's horrible.
Accordingly, as you get chiseled into by all of these different things. What would you see come?
Well, and that's what's been happening for 5 years, right? So, like, this isn't theoretical anymore. Look, we don't want to try and predict too much what the shock is going to look like, but I'm going to give you a conservative take on it, right? So this is like as conservative as I can possibly be. The coming shock will be twice as bad as the previous pandemic plus Russian-Ukraine war shock, right? Now, that's without taking out, that's way too...
Maybe even worse than that.
...conservative, in my opinion. But it's a good thought experiment, if you think about it, like, okay, so...
We have the largest financial bubble in history, the U.S. financial system. And its collapse is going to wreak absolute havoc across the world, and it's going to change everything forever.
The previous shock, we clogged up the shipping lanes, we had to reroute the entire global energy market, et cetera, et cetera. Living standards fell by X. Okay, this time we've actually cut off, 15-20% of the oil supply, bunch of fertilizers, everything like that. Okay, so it's going to be at least twice as bad, right? Like, at least. Well, if anyone's lived through the past 5 years, just imagine you now have substantially lower living standards than 6 years ago. My guess is it's about 10% lower, something like that, around that ballpark. And actually, Larry Summers did an interesting paper where he redid the inflation things, and I think he got up to 18% inflation at the top. Felt about right to me. So let's say, again, conservatively, people have lost about 10 to 15% in their living standards in the United States, and relatively similar in Europe, maybe a little bit more, in the past 6 years. Okay, so then load up again. You've lost 15, call it 15. Okay, you've lost 15, add another 30 on top of that. 45. Okay, you've lost half your living standards. And that's not, I don't need wheelbarrows of cash to get to there at all. I just need twice the shock that we've experienced in the past 6 years, which is completely imaginable. So there's an incredibly conservative case. Now, do I think it'll be...
And there's going to be such anger about this. The globalist class is, I wouldn't want to be them. They're going to be fleeing the country.
Worse than that? Yeah, I do probably think it's going to be worse than that. But there's a really conservative case that can just take place through the same sort of inflation, but maybe just twice as bad as we saw over the past 6 years. And where you get to is living standards 40, 50% down. And that to me is probably equilibrium living standards in the West, given the geopolitical changes, the lack of,
You outsource your manufacturing, you've outsourced your prosperity. Your standard of living will now fall until it reaches a deindustrialized level.
Hollowing out of our manufacturing, all the things that have been going on for the past few years that are now being accelerated. But it's grim. It's like, it's not going to, and people, the thing that really worries me is that people have been really trained to think that living standards are everything. And you see a lot of evidence that, like, especially younger people are willing to do basically anything to maintain their living standards. It could create a really nasty society, It's worrying. It's really worrying. But it feels inevitable, to be honest.
Okay, it's interesting because your numbers, I come to the same numbers, but from a different angle. So first we observed that there's no such thing as a low energy rich country, right? So this is a line showing, kilowatt hours of use per capita across, GDP per capita.
Great.
And it's a straight line.
A lot of good graphs in this video.
And like if any country had cracked it, Philip, and figured out how to waste a lot of energy but still be poor, they'd be up here. But if somebody had figured out how to use a little bit of energy but, be rich, they'd be down here. Nope, straight line. Okay, That's total energy. But then when I go down to this and I ask the question, okay, right before the war, we were producing 86 million barrels a day of just crude oil. They put all this other crap in there. I don't like it, right? Natural gas liquids, all that stuff. Okay, we were at 86. I think we're down 15. So I think we have to go from 86 to 71. When's the last time the world was burning 71 million barrels of oil? Up about 2002. The world economy was half as big, right? So if we maintain this 15 million barrel a day deficit for a year, the world's going to have to figure out which half of the economy are you going to shuck? Now, listen, we'll find some efficiencies. We'll do things a little
Half of the economy you shut down.
better. Maybe we won't be that dumb. But I'm in high double-digit declines if we stay on this path.
100%. The other thing I noticed in that chart was you saw a temporary decline in the lockdowns, right?
Oh, yeah.
Down to that level. So what they're going to have to do if there's shortages is do some sort of energy lockdowns, right? I mean, that is going to be what they're
Energy
They're going to
lockdowns.
have to ration. And so
Oh,
that's gonna
God.
mean, like
They've started writing these WF types are already writing gleeful articles about what the
Yeah, look, they did manage to bring it down there briefly during the lockdowns. They're going to have to do that again.
energy lockdown might look like. They're very happy about this. I'm pretty excited.
Yeah, they're going to do energy. I mean, I have a joke that oil supply shortages aren't contagious, so at least we won't have to wear a mask. But
Surprise.
they might put the mask on you, like the mask or whatever. But yeah, it might get people to comply. But
You'll have to wear your energy beanie. It'll be a thing.
That should serve like head heat or something like
Correct.
that. Yeah, something stupid. Like maybe it looks like a clown, or I don't know what they'll do. But no, I think they're going to try that, and I think that's how we should start thinking about living standards. Like in the lockdown, we had drastically lower living standards. We just didn't think of it that way. But we did. No one goes to the cinema anymore. But you know what I mean? You couldn't go out. You couldn't spend money at the restaurant,
Well, it was great for people who were streaming at the time.
whatever. Like, that's a model for having drastically lower living standards. That's
Maybe my channel would explode. No, kidding.
what we had. We had state-enforced, drastically lowering living standards with some humiliation tacked on in the lockdowns. So, that's what it's going to be again. But this time, as you say, there's going to be a physical force pushing it. Whereas last time the lockdowns was a choice. It was basically just a choice. This time it's not a choice. So, you can, if there's energy lockdowns, you can, in principle, oppose the energy lockdowns. But you are actually facing a real physical constraint. So, it's really bad. Yeah. It's not, I don't know.
I think they're thinking about doing these energy lockdowns, and it'll be fun because they have this model COVID at work. But remember, during COVID, you had CISA deciding who was essential and who was non-essential. And so, I was non-essential. I'm a keyboard warrior. You stay home, but that guy is going to have to deliver your DoorDash, and he's essential, right? So this time, though, this is different. Those are sort of human decisions, right? These are molecules. This is physics. And I can only imagine the disaster as California regulators are trying to decide which trucks get diesel and which don't. None of them know a thing about logistics and
God, it's going to be hell to live in the blue state.
how the economy actually works. So the thing I see the economy as a complex system, not complicated. It's complicated, but it's also complex. So it has independent feedback variables that make it complex. It means it has emergent behaviors. And I think they're going to be as surprised as us when they try squeezing this because we don't have enough oil and it just doesn't work, right? Weird things happen that they hadn't planned on. That's a guarantee. I worry they're going to actually break the system financially, monetarily, I mean.
Yeah, they might do. I mean, They are. I mean, it's going to be basically the same prioritizations, right? It'll be for the who were the essential workers. They were the people that were making and moving things, right? And it's the same principle if you're doing an energy lockdown. You prioritize the people who make and move things and you deprioritize basically the end consumer of movement. Like you deprive them of movement. That's basically what you do. But you make sure that the shop near them is stocked up with food because that's the more basic need or whatever. So I mean, you could actually say that the lockdown was in effect a test for this. I won't go further than that. But you could say it's a test for a global war scenario, just saying, which we're in very shortly after the lockdowns. So I think that they will. That's pretty much what the prioritization will be. It'll be people who make and move things. Will it be a giant mess? Yeah, of course it'll be a giant mess because, like, how on earth can our ridiculous governments do rationing rationally? But I think basically the outline is there in the lockdowns. The only one thing that I'd say to be slightly optimistic about an energy lockdown scenario is that logically speaking, in the lockdowns, you wanted people to be less communal because they were going to catch the plague or whatever. And in the energy lockdown, you want them to be more communal because they'll use less energy, just physically. So, I mean, I kind of toyed with writing an article called The Fun Lockdown, just to try and, convince people to try and keep some sort of a human element in what we're going to go into. But I think logically speaking, it will. Like, if you have family over, it's better for the energy economy because you only have to heat one home instead of two or whatever. So it may actually not be as bad as the COVID lockdowns, but the crushing of living standards that'll come along.
No, it'll be bad.
With any energy lockdowns. Again, we're speculating, maybe they won't come, but they're talking about it. It's the logical thing to do, and etc. So it probably will happen. The fall in just monetary or real good living standards that we'll see during the phase will probably make it on net more painful than the lockdowns. I mean, it depends how you weight personal interaction versus material stuff and all that. It's complicated, but I think it'll be pretty rough. Yeah.
Well, you're right.
I think that we're going to get an oil shock. Trump will panic, whatever, cave to Iran, and then 3 to 6 months after that, we'll be back to normal, at least in terms of oil. And yes, there will be a period of shortage, but it won't be as bad as COVID. I think the financial crisis next year, that's another story. The food crisis next year, also another story. But the oil, the prices will just go up a lot. It'll be a shortage, but also a skyrocketing prices, and it's just going to hurt people economically. In terms of actual shortage of supply, well, I think that $8-9 gas destroys a lot of demand.
Right. A lot of people actually enjoyed the COVID lockdown.
The shortage will drive the prices up, and then the higher prices will keep at least tanks full, gas station tanks full, because it'll destroy demand.
Break from the drudgery. They could never quite get people to go back to office buildings again. So once they'd broken the seal on that particular idea, they're like, no, you have to commute, and everybody hates it. But once they broke it, people are like, no, I'm not going back, man. It's not happening.
Yeah. Yeah, there was some mildly positive development. I mean, I hated it. I just really hated it. But there was some mildly positive. Yeah, I guess. I mean, here it won't be. At least you won't be told like you can't go to the park and all that. Like, I don't think the totalitarian aspect will be nearly as bad as the COVID lockdowns. But balance that with the fact that the living standard decline is probably going to be substantially more. And I think it weighs out.
How are you preparing for that?
For this?
Yeah.
To be honest, I'm moving to a neutral country.
Okay.
With energy security and food security, because I mean, Europe is in a particularly bad spot. It's dissimilar to America insofar as there could be a war on the continent. I think it'll be a limited war for what it's worth, probably a missile and drone war, something similar that we see in the Middle East. But the way that things are developing in Europe, I think that there's a fairly high probability there will be a missile and drone war, and that just adds a whole other element of. I don't think it's like high casualty or anything like that, but I think just deeply unpleasant, and the response of governments to that, and especially if you understand how the European Union system works, could be really, really totalitarian, actually. If they could start to consider themselves truly at war, I think that they take pretty much any powers into their hands. So your best bet is probably to be, from a European perspective, your best bet is probably to be in a truly neutral country, not these fake neutral countries that have shown that they're willing to go into NATO wars or whatever. But Americans don't have quite that problem, so I think it's kind of different. But I think the principle's the same. Find somewhere that's more energy and food secure than New York City, for example. I don't know, just putting it out there.
Yes.
Any city?
Any city?
Well, the food crisis, that's next year.
Just to be neutral.
Anyway, this was a very good video. Maybe not too optimistic, but it was good. And yes, that's one reason I'm streaming again and creating content. We are getting to another 2008 period. And the spark with that was the Iran war, definitely. And it's going to be interesting for months to come. Not in a good way for the average person, but yeah. Better to know what's coming and why it's happening so you know who to blame for your falling standard of living. Anyway, this will be on YouTube. Like and subscribe. Come watch on Kick or Twitch, and I'll see you next video. Bye.